The new normal, how the US-China trade war is redefining the global economy. The global economy stands at a defining crossroads. What began as a tariff dispute between the world's two largest economies, the United States and China, has now evolved into something far bigger, a systemic shift in the way nations trade, cooperate, and compete. As the so-called new normal emerges, economists warn that this confrontation is no longer a short-term disruption, but a long-term transformation of global order. Under President Donald Trump's second term, Washington has doubled down on its protectionist stance, imposing new tariffs on Chinese goods, limiting technology transfers, and tightening restrictions on investments tied to Beijing. China, in turn, has responded with countermeasures, expanding its domestic innovation programs, forming new trade partnerships across Asia, and reducing dependency on American markets. What was once a bilateral trade conflict has now become a strategic standoff, reshaping global supply chains from Asia to Europe. Finance ministers and central bankers meeting this month acknowledged a grim reality. While the global economy has shown resilience, uncertainty has become its defining feature. The International Monetary Fund, IMF, and World Trade Organization, WTO, warn that persistent tariffs and fragmented markets could erode global growth, pushing developing nations into difficult corners. This new normal is one where trade blocs replace globalization, countries are prioritizing regional alliances over open global trade. Economic nationalism rises. Governments seek self-reliance in energy, semiconductors, and AI, even at the cost of efficiency. Investors hedge for instability. Global markets fluctuate, not only on interest rates but on diplomatic tweets and political speeches. While some countries, like Vietnam, India, and Mexico, are benefiting as supply chains shift away from China, others risk being caught in the middle. For developing nations, especially in South Asia and Africa, the trade war adds pressure on currencies, debt, and export competitiveness. For example, Pakistan and Bangladesh face rising import costs for machinery and fuel. African economies that rely on Chinese infrastructure loans are reassessing their debt exposure. Western companies are moving production but not necessarily bringing new prosperity to the global south. Beyond economics, this trade war is also a battle for technological supremacy. The US aims to contain China's lead in artificial intelligence, quantum computing, and 5G technology. Beijing, meanwhile, accelerates its Made in China 2035 strategy to dominate next-generation manufacturing and digital innovation. This rivalry has turned supply chains into weapons, where chips, software, and data have become instruments of geopolitical power. What lies ahead? Economists increasingly agree that the old era of frictionless globalization is over. The world is entering a multipolar economic order, one shaped by uncertainty, competition, and selective cooperation. For global traders, investors, and policymakers, this means diversify supply chains, prepare for regional shocks, understand that economic power is now inseparable from political will. In short, the US-China trade war is not just about tariffs. It's about rewriting the rules of the 21st century economy. The new normal is here, a world where trade has become both an opportunity and a weapon. As Washington and Beijing lock horns, the rest of the world must adapt, rethink its dependencies, and redefine its strategies.
In this emerging order, those who understand the politics behind economics will lead. Those who ignore it will fall behind.